But let's bring on board. We have Manish Dhangi who's joining us on the show right now. Along with Manish Dhangi, we also have Mr. R. Gopalan who's joining us. Very good afternoon to you, Mr. Dhangi, as well as Mr. Gopalan. Thank you so much for joining us on ET now. Mr. Dhangi, what exactly is at play in the markets right now, given the fact that we're seeing sharp fall across the board? We thought FMCG index was holding on to some gains. Some of the names were holding on to gains, but they've also actually caved in.
So market is embracing a weak Modi setup at least, and it's not fully priced in yet. So the areas where there was euphoria, given the policy thrust of the incumbent, be it in PSU, defense, manufacturing, that's bleeding a lot more. Once we sort of look beneath the surface, there is sort of all blood on the street right now. And legitimately so, because they were pricing blue sky, and it's likely that a lot of it will have to be unbound. It is still likely that Modi would return, but the best case scenario for the market would be a Vajpayee-like Modi versus one, which continues to have animosity with state, because the later setup would be very, very bad for market. So I don't think markets have sort of absorbed the entire news. In fact, the entire news is not yet out. The margin of victory or the trailing margin are still sort of very low, 5, 10, 15,000 in many, many seats, 100 odd seats. And we frankly don't know yet, what's out there. Only by evening we'll get to know, and, market would continue to sort of react to the incremental, news flow.
Right, Mr. Dhangi. Surely, we still don't know. We'll have to wait till evening to get the final word. But as of now, the leads coming in, seems like Mr. Gopalan, what we'll see is maybe what if the government comes but with a weaker mandate? Then do you think that there is a chance that they will have to focusing more in terms of the social spending side, and that is something that they will have to do now? Mr. Gopalan, I believe you're on mute, sir.
I thought.
Now I can hear you, sir. Yes, now we can hear you.
Oh, okay. See, for a long time, the public and the government and the Indian economy has been used to a macro stability. So, the prioritizing macro stability is going to be very important for any government. Even for this government, it has been its policy. It will continue to do that. And reforms, in my view, will certainly continue. And I also feel that public capex, for the time being, until the private capex is able to put up a good show, the public capex will also continue, along with its ability to have the bandwidth to get implemented. So the external conditions of China plus one, that is also going to be useful to us, despite the other conditions in the external market. I have a feeling that no government will do anything to upset this kind of a fiscal balance and stability which has been created. Because they know very well that if they do that, possibly there will be difficulties in the both in the prestige which we have abroad, and also the kind of stability and the continuity which we have. Look at it. People are very happy with the food grains supply, electricity, house, gas. You talk of this kind of things. These are all things which the public need, and the politicians also know that they cannot go back on them. So, if there is going to be a little bit more populism, yes, there can be, but I strongly believe that it will be within the confines of macroeconomic stability.
Right. Actually, taking a leaf out of what Mr. Gopalan had to say, Mr. Dhangi, now all eyes will be on the policy reforms coming in, right? Given the fact that if the numbers are to go by, we will actually see them settle as time goes by. Maybe by late evening, we will get a firmer number. But for now, if you look at the way how the picture is, 289 coming in for NDA, which means it's just a tad bit above those halfway mark, which means that it gives the government a weaker mandate, isn't it? So they will have to be more, we will not see that firm a move when it comes to the policy reforms that they've been taken over the last 10 years. Is that spooking the market as well?
Yeah, so I'm actually not a big votary of all these major reforms. I think a stable regime over next few years is decent enough for us to revive capex and start to then chug along and sort of produce a decent growth. I think if there is a silver lining that a lot of the cultural and ideological policies, things like, let's say, capital gain tax, may not come. So, in midst of so much of doom and gloom, there could still some positive takeaway. But as a matter of fact, as I said, markets were baking in sort of blue sky in so many things that that trade will have to be unwound. And unfortunately, far too much of retail is stuck in retail money is stuck in small caps and these themes. That pain would, as I said, just beneath the surface, that pain is sort of far more than what you're seeing on the screen as far as Nifty and mega caps are concerned. So I'm not sure, the so-called reforms would sort of, that lots of people were clamoring for, land, labor, some of these won't come. The ideological big moves won't happen, such as capital gain tax. And I guess, the onus now is on the private sector, given the capacity utilization are high, the financial conditions are decent, leverage is low. You have a reasonable case to make that Indian capex revival can happen. But then on the other side, you'll have a flow pain that both foreigners and locals, will have to revisit. The foreigners, because they have better opportunities abroad, especially in emerging markets, including China. And locals, because, they are overweight right now on Indian equities, especially what has happened over the last 6-12 months. So that reassessment will happen and, flow will slow down. So after this, period of turbulence over next few months, you will still have sort of a reasonable space for one to dial risk. And I stay sort of constructive on India. India growth will be decent over the next 3-5 years, and therefore there will be opportunities. But then, don't dial risk for investors right away, don't dabble in risk right away just because things are down. Let the big picture emerge and, take a first principle approach of what sort of policy frameworks will sort of evolve, and basis that, you take the call.
Right, just don't dive in. That's a word coming from Mr. Dangi, right? Just wait. Let's wait for some bit of a stability. And, Mr. Gopalan, that's what you were also talking about, prioritizing that macro stability. You just answered there that, that is going to be very important for, the government that comes into power. Does that, the ground for India being that powerhouse, how does that stand into play versus the global scenario right now? And how are you seeing that macro then?
Well, that's the reason why I mentioned to you that our prestige abroad, how do we project ourselves abroad, has a tremendous impact both on economic growth and security preparedness. So I don't think any government can afford to tinker with the macroeconomic stability, because that is really fundamental for the purpose of projecting your prestige as well as on security preparedness. That's very, very important. The way we are facing how the international situation is turning around, that's going to be very, very important. And I am sure whichever government is here, the reforms will certainly continue. May not be with great depth. For instance, if you look at a great reform in labor and land, may not be so much, but there still will be some reforms, because even for a let us say the opposition comes to power, for argument's sake, now they have to feed the bottom 40% of the population. Their income levels are pretty low. Their consumption is consumption asset, the asset being held by them is very low. So income generation by them is going to be low. So how will they consume? And if they don't consume, how the economy will grow? So all these factors will be certainly taken into account by whoever comes to power, and they will certainly be very, very responsible. Maybe of one or two populist thing which may not cause so much of harm to the budget and the macro stability. So that may be there, but beyond that, I don't think the trend set in the last 10 years can ever be changed.
Mr. Dangi, coming back to you, what's your view now coming in on the bond markets, given the fact that we've seen a spike of about 12 basis points on an intraday basis coming in for 10-year bond yield. This is the most in about 8 months. We've reached 7.06% levels coming in for bond yield. Do you still believe that we are in a secular bull run coming in for the bond market? No doubt the bond market also moved yesterday also in anticipation of what the exit polls threw up, isn't it?
No, it's certainly a sort of a shock to bond markets because, as I mentioned on your channel yesterday, also the strong Modi is effectively a strong bond trade, more than a strong equity trade. And if the government is such that the heft of BJP is reduced, and Mr. Modi's sort of reflexes are going to be different. He runs a very tight government, and if the BJP is going to be at 230 to 240 seats, it essentially means that there's going to be a coalition dharma, and it's also a win of social justice policies and such like. So, in some sense, the government will have to sort of bring itself sort of close to center from being right now, and that would mean a lot more sort of rural spending, less, and government budgets are of course constrained. So in some sense, the spending will be lot more on redistribution instead of capex. So which is sort of more inflationary, and this kind of outcome, of course, certainly is pretty bad for bonds at margin. So there are many tailwinds as far as bonds are concerned. US rates are going to go lower. Indian inflation is pretty low. Indian growth will actually at margin will begin to slow, and therefore monetary policy will have to sort of support. But a very strong Modi would have led to a significant bull market in bond. I think, I will have to chop off 25-50 basis point from the potential gains that we would have had in next 1-2 years if there were to be a coalition government of a kind that we are seeing right now.
Right, Mr. Dangi and Mr. Gopalan, thank you so much for joining in with us today on ET Now and giving us your thought and views in terms of, the markets as well as the mandate, what's happening over there and the reforms that one should watch out for.
If you like this video, then like, share and subscribe to ET Now.